Okay, good morning everybody, and welcome to this lecture on budgets and cash flows. So budget and cash flow, quite important in real life. I'd say especially when you're starting out your own business, it's very important to, obviously you know what you need in your personal capacity to do a budget and to see whether your idea for your business will have enough profit to cover what you need personally. But then also we need to look at a cash flow statement. In many cases, a business can be profitable, but then run into cash flow problems. So it's very important to also plot how your cash will flow over the next few months. So let's get right into it. I'm going to share a presentation with you guys to have a look at budgets and cash flows. Right, okay, so let's start with the budget. So we've got two separate documents. We've got a budget and we've got a cash flow. Now, although they will overlap in certain aspects, it's two completely different documents. They're a budget and a cash flow. So the purpose of a budget, we're first going to look at a budget. The purpose is to determine whether your firm will make a profit. In other words, how much you can draw monthly. So that means we're going to determine what we think our income is going to be over the next period, or a number of months. A budget can be for any amount of time. It can be for next month, 4 months, 12 months, 2 years, 10 years, however long you feel necessary. So the purpose of the budget is to see whether your firm will be profitable. So you pretty much take your income, you deduct your expenses, and you will then get to either a profit or a loss. So if we look at point 2, it says it only contains income and expenses. So none of the balance sheet items reflect in a budget. In the previous lecture, you remember we did financial statements. In those financial statements, we had an income statement and a balance sheet. Now, only line items that reflect in your income statement will reflect in the budget. It basically looks like an income statement, but there's one for every month for the future that we are trying to plan. So how do we know whether a transaction should go into my budget? The question that we have to ask ourselves then, point number 3, is does it affect my equity? So I have my firm gained or lost value because of the transaction. So anything that increases my equity, in other words, income, or any item that decreases my equity, in other words, expenses, will be included in the budget. So again, we'll do a little exercise which will hopefully give you guys a better indication of what we are actually working with. Then let's look at our cash flow forecast. So the purpose of a cash flow forecast is to determine our initial funds or overdraft required to start and maintain the firm. How much cash will you need? So if we do a cash flow forecast for the future or for a number of months to come, that will tell you what the lowest point is that your bank balance will be. So if that goes into overdraft, you know you either need to put in some new capital or more capital in the beginning if you don't have an overdraft, or if you don't have capital to put into your business, you know you have to go to the bank and get an overdraft up to a certain value. Otherwise, you will run into cash flow problems. You won't be able to pay whoever you need to pay, and your business will pretty much fail. So in point number 2, what do we show in a cash flow forecast? And the answer is we only show transactions that reflect or that will reflect on the bank statement. So the question that we ask ourselves is, will it show on my bank statement? So for any transaction that we need to go and plot into either the budget or the cash flow, if your answer will be in future, this transaction will touch my cash book, my business bank statement, then the answer is yes, it has to go into the cash flow forecast. If the answer is no, it will never go through my bank, then it will definitely not go into your cash flow forecast. So let's look at the format of a budget. So do you see here the budget? If we look at the month, so we plot our months. So we've got November, December, January, and February. And if we look at the months there, it looks exactly the same as the format that we used when we did the financial statements. We'll have our income, and that's what we call our projected income over the next few months. We'll have our expenses. So these are all the line items that we'll normally use as expenses, and we will project that over the next few months, and that will then give us either a profit or a loss. So in that month, in November, we'll have a loss, and then from December onwards, we'll slowly start making a profit. And at the bottom, we've got a line that says accumulated profit or loss. So that basically just means it's the net effect of all of the months that I've got. So at the end of February, I'm projecting that I would have made 8,000 Rand from this business cumulatively over the months that we've worked with. Right, so let's look at the format of a cash flow forecast. Now, in terms of a cash flow, we don't have income and expenses. We call it positive cash flows and negative cash flows. So under your positive cash flows, you'll have money coming in from your clients. And if you as the shareholder were to put money into the business, that would also be positive cash flows. So basically anything that you say in future, this will come into my bank account, will be included under the positive cash flow section. Negative cash flows is again any money go out. So it's not necessarily expenses. It could be capital purchases, and capital purchases will also reflect under negative cash flow. So anything where you ask yourself, will I in future have to pay this money from my bank account? Those items will reflect under negative cash flows. So then at the bottom, we've got our movement for the month. So for that month, we've had negative cash flow of 18,000. That month, 25, 4, and 6. So if I start my business from scratch in November and I pay out 18,900, what would my bank closing balance be at the end of November? It's 18,900, and that will then also be my opening balance for the next month. Now, if I've got an overdraft of 18, I make 25, I'm going to have about 6-7 in the bank. Again, the 6-7 carries over. For that January, we've made almost 5,000. Now I've got 11,000 in the bank. So in this case, can you see that if I go back to my budget, in my budget, this firm is profitable. So if we only look at the budget, one might go into this business and say, no, this is a profitable business, we won't have any problems. However, if we look at the cash flow, we see the lowest point that we've got is 18,900 Rand. So that means I've either got to loan 20,000 to the business in November so that this never goes below zero, or I need to go to the bank and say, guys, I want to start a business. I need an overdraft for 20,000 Rand before I can actually start this business. And that's the reason why it's also very important to do a cash flow and not only a budget. So for each line that I give you guys in the example, we've got 4 possible answers. First answer is we only need to reflect the transaction in the budget. The second answer is we only have to reflect the transaction in the cash flow. So that would be basically balance sheet items, or it can be reflected in both, or it cannot be reflected at all. So that's the 4 answers. So it's either only in the budget, only in the cash flow, both, or nothing. Okay, so best way for you guys to understand this, let's share a little example and work through this together. Okay. So example says the following. We start a new firm. So already from that we can gather we have no money in the bank when this starts. So there's no opening balance that we have to carry forward into our cash flow. So it starts in November, and we have to do a budget. We can just add there and say, and cash flow for the full month ending the following November. So we've pretty much got to do a budget and a cash flow for the months of November, December, Jan, and Feb. So again, I've got a little template in here, and we can just go and slot all the transactions into the template. Right, so let's start. So in the first question reads, fees for the 4 months will start at 20,000 Rand in November and increase by 10% per month from there on. Right. So now the first question we've got to ask ourselves is, does this only tell me something about the budget? Does it only tell me something about the cash flow? Does it tell me something about both? Or does it tell me something about that would not affect either one of the two? So let's start to think. Fees for the 4 months will start at 20,000 Rand. So that means my firm will generate income of 20,000 Rand in November. So what happens the moment we earn income? We have to enter it on our budget as income. So that means in November, we will show income of 20,000 Rand. Then I say, and this will increase by 10% per month from there on. So it means in December, we're going to show a 10% increase on November's amounts. So that would be November times 1.1. So it means in December, we will have fees of 22,000. In Jan, it will be December's times 1.1. And in Feb, January times 1.1. Okay, so that's how we reflect that transaction in the budget. Now the question is, if I write fees, will my clients, the moment I write that fee, pay me that money? And although that would be great, the answer is sadly no. So I don't yet know how the clients will pay those fees. So at this stage, I don't have enough info to complete the cash flow section of this. Okay, because the cash flow will tell me how these fees get paid by my client, but I don't yet know. So if we read number 2, it says debtors are expected to pay 60 days in the month after a fee is raised and 40% within the next 60 days. So does that now tell me, is there any income that is generated there? Are we saying we are writing more fees to the value of 60 and 40%? The answer is no. So that number 2 line item won't affect my budget at all. It's not telling me anything about new fees that's been written. But if I go to my cash flow, it is now telling me how the fees that I have generated in point number 1 will be settled by my clients. So it says debtors are expected to pay 60% in the month after a fee is raised. So in November, will I have any cash inflow? And the answer is no. These fees that I write in November, 60% of that will only come in December. So I'm going to say December's cash inflow is that times 0.6. So it means I will receive 12,000 Rand in December. In Jan, on the 30-day debtors, I will receive 60% of the fees I've done in December. And in Feb, I will get 60% of the fees I've done in Jan. So now, had we had a column for March, we would include the Feb receipts in March, but the question only asks us to go up to Feb. So the fees that I write in Feb will be irrelevant for purposes of my cash flow. So if we just go back to the question, it says debtors are expected to pay 60% in the month after a fee is raised. So that's the part that we've done now. And then it says it will pay a further 40%. So the balance will be paid within 60 days. So that means 40% of my November fees I will not receive in December, but in Jan. So in Jan, I will also get 40% of November's fees, and in Feb, I will get 40% of December's fees. Now again, Jan and Feb will go on there to the right, but in this case, we don't actually need it. Okay. So that settles point number 2. So point number 2, so for 1, the answer is it only reflects in the budget. For number 2, the answer is it only reflects in the cash flow. Now we get to point number 3. Bank charges of 300 Rand was incurred in November, and it increased inflationary at 6% per month. So now let's first determine, should that reflect in my budget? If I pay bank charges, will the bank give the money back to me? No, it's gone forever. In other words, my business has lost value because of it, which means we need to reflect that as the expense. So it says my expense for November was 300 Rand. And in December, we increased it by 6%. In Jan, we'll increase the December amount by 6%. And in Feb, we'll increase my Jan amount by 6%. Now we've got to ask ourselves, so the answer is yes, it definitely goes into the budget. Now the question is, does it go into the cash flow? So when the bank takes their charges, do I see that on my bank statement? The answer is yes, it definitely does go off my bank. And is there a difference in the period? Do the bank invoice me this month for their charges and then only take it next month? No. In the month where the bank invoices me for the charges, they take it off my bank account immediately. So my cash flow will look exactly the same as the budget. So I can simply take that line item and paste it all the way through. So the answer to number 3 is it reflects both in the budget and in the cash flow. Then we move to point number 4. Printing and stationery was purchased on account at 400 Rand per month. So first question is, does it go into the budget? If I go and buy my pens and pencils and all of that, will the bank eventually, or will the stationery guys eventually give it back to me, or buy it back from me? No. The moment I buy it, that money is gone and I've lost that value in my firm. So printing and stationery will definitely be expense, and it's 400 Rand per month. It doesn't say anything about a monthly escalation. So I'll only put the 400 Rand in each of my 4 months. Now, if I say it's purchased on account, does that tell me anything about the cash flow? And the answer is no. It simply means I've incurred the expense. I don't know when I'm going to settle the stationery. So the answer to number 4 is it only goes into the budget. But then if we read number 5, it says all creditor accounts are settled in 30 days. So I've put stationery in brackets so that you know this is linked to point number 4. So that now tells me when I'm actually going to pay these creditors. Now, I'm not going to show another expense here for 400 Rand because I've already shown the expense. But now I can say my November expense, I will settle in December. My December expense, I'll settle in Jan. And in Feb, I'll settle my Jan account. And for purposes of this exercise, I'm not phased about what I have to pay in March. So the answer to point number 5 is only reflect in the cash flow. I've already shown the expense in point number 4. Point number 5 tells me when I'm actually going to pay for those expenses. Okay, then we get to point number 6. You pay a once-off rental deposit of 3,000 Rand and then monthly rent of 3,000 Rand. So there's a few elements in this. So firstly, let's say the rental deposit. So let's ask ourselves, does that go into my budget? So If I pay a rental deposit, will they pay it back to me in future, or is that money lost? The answer is they'll most probably pay it back. The money is not lost. So I'm not going to reflect my rental deposit in the budget. But for cash flow purposes, will it go out of my bank account? Yes, definitely. So it means in the first month, November, I have to pay my rental deposit. So that will reflect as a negative cash flow. And then let's have a look at the actual rent. So when I pay my monthly rent, will the landlord give it back to me? No, the money is lost. So I have incurred an expense the moment I pay my rent. So my rental expense will be 3,000 Rand from November. There's no escalation, so I can simply copy that all the way through. And what's normally the rule with rent? Rent is payable within the first 7 days of a month. So that means my rent expense, the cash flow, will be in the same period as the actual expense. If you had to pay your rent in arrears, in other words, the month after, then it means I will show my cash flow for the November expense in December. If it's payable in advance, then I would have had to pay the rent in October for the November expense. But in this case, let's accept it's the same for both. Right, now we get to salaries. Salaries of 14,000 Rand per month. We assume a 10% tax bracket. I know that doesn't exist, but it makes it easier to work out. And a bonus check of 2,000 will be paid in Feb. Right, so let's break that up into two separate transactions. Salaries of 14,000 Rand per month. Okay, so does that go into my budget? After I pay my employees, will they pay the money back? No. So my total salary, my expense, will be the gross salary of my employees. So my salary expense is 14,000, 14,000, 14,000. But now what happens on the cash flow? On the cash flow, we have to deduct the tax from our employee in the month where they get paid. So my salary expense in November will only be 90% of the expense. Why? Because we have a 10% tax bracket. So 10% of my salary will go to PAYE. So I will only pay my employee of his 14,000, 12,600. And now what's the rule? When do I have to pay the difference? I have to pay the difference, in other words, the PAYE, by the 7th of the next month. So I'm going to say, this is your salary. I only paid you that much. So 1,400 Rand, I've deducted 1,400 Rand tax. And that cash outflow will only be by the 7th of the next month. So in December, my cash flow will be 90% of the salary there, and 90%, and Feb 90%. And then again, I can just copy it through. My PAYE for Jan will be the PAYE on December salary, and my PAYE payment for Feb will be the PAYE of Jan salary. So my expense is 14,000 Rand, and I show the expense in the month that the salary accrues to the employee. But on cash flow, I've got to break up the amount that I paid to the employee and the tax that I pay by the 7th of the next month. So salaries will be both budget and cash flow. Then it says a bonus check of 2,000 will be paid in Feb. Okay, so this means that because this employee, so bonus checks are a bit of a different one. So this employee doesn't receive his bonus only because he worked for us in Feb. Every month he accrues a little bit of his bonus because he works for us every month. So in practice, what we'll do is we'll say, if he gets 2,000 Rand in Feb, we break that up over the month that we are doing the budget for. So if you take 2,000 Rand, divide by 4, because we've got 4 months, means the bonus check or his bonus will accrue every month. So in November, I'll say you accrue, so I'm showing the expense because he works for us for November, December, Jan, and Feb. But on a cash flow basis, do I physically pay him that 500 Rand every month? And the answer is no. The bonus check of 2,000 will be paid in February. So on a cash flow level, I will only show the 2,000 Rand payment in Feb. So the moment you accrue for an expense, you accrue for it or you accrue for it over the total period of your budget. But for cash flow purposes, we only show it in the actual month as the cash will flow. Right, so in terms of number 7, salaries is both budget and cash flow. The bonus check will be in the budget, but broken up monthly, and then the full amount reflected in the month where the cash will actually flow out. Right, then we get to number 8. Number 8 is a bit of a hairy one. So in November, you purchase a motor vehicle of 50,000 Rand on credit. So what happens? I go into the shop, I sign for a motor vehicle, I leave the shop, and I'm driving my new car, and I owe the bank 50,000 Rand. Now, will that affect my equity? Will I have gained value or lost value because of that? So when I walked into the bank, I had nothing. When I walk out, I've got a car of 50,000 Rand, but I've got debt of 50,000 Rand. So what is my value? My value is still nothing. So the moment my value hasn't changed, it doesn't affect my budget. Let's look at the cash flow. If I had no money in the bank and I walk out of the bank, if I have no money in the bank, I walk out of the car dealership, I've got a new car, and I owe the bank money, but I haven't paid anything on it yet. Will it affect my cash flow? And the answer is no. So for the first part of that line where we purchase the motor vehicle on credit, that would not affect my budget or my cash flow. Okay, now we start looking at the repayment of this loan. So it's telling me that I've got interest, I'm paying interest on the loan of 1,000 Rand every month. My vehicle depreciates at 10% per annum, and my monthly repayment on this car is 2,500 Rand per month. So let's break that up one by one. So let's first look at the interest. Will the interest affect my budget? If I charge you interest on money that you owe me, will you have lost value because of that? Yes, because if you owe me 1,000 Rand and I charge you interest and now you have to pay me back 1,100, you've lost value of 100 Rand. So the interest portion of this transaction will reflect in my budget. So in the budget, I'm going to put interest of 1,000 Rand. I bought the vehicle in November, so my interest will start to be charged. I will lose value of 1,000 Rand because of the interest. Now, do I physically pay the interest? And the answer is yes. But do I pay the 1,000 Rand interest, or will there be capital? Do I have to pay more? And the answer is I have to pay more because of this loan agreement. So the actual repayment, the 2.5, that's the amount that physically goes off my bank, which will include the interest and the capital. So the 2,500 Rand will go into my cash flow as my vehicle repayment. Okay, so the interest portion goes into the budget. My actual repayment, which includes the interest and the capital, goes into the cash flow. So now we've done that interest portion, we've done the repayment portion. Now let's look at the depreciation. So depreciation basically reflects, so if I buy a motor vehicle today, in a year from now, that vehicle will have lost value. It's not worth the same amount. It doesn't always stay at the same price than what you purchased it new. So we have to reflect that in our financial records, because our financial records have to be a true reflection of your worth. So in this case, we've decided that our motor vehicle will lose 10% of its value every year. And depreciation is a monthly expense. So it means it's an expense because if my vehicle's worth 50,000 today, tomorrow it's worth 49,000, then it means I've lost value of 1,000 Rand because of the depreciation. And that's why depreciation will reflect as a expense. So to calculate it, we'll say Rand times 10%. So annually, my depreciation will be 5,000 Rand. But our budget is monthly. So I've got to take my annual amount and say divide by 12. So 416 Rand will be the value of my depreciation. So 417, 417, 417. Okay. So depreciation will reflect in my budget. Now I have to ask myself, does depreciation affect my cash flow? And the answer is no. I don't go to the bank and pay my depreciation every month. It's simply a book entry to reflect how my asset has lost its value over time. Okay, so that's number 8, quite a difficult one. Might need to rewind and just check that portion again. Right, then we loan to the company 30,000 Rand in December, and we purchased 20,000 Rand in computers cash in the same month. And then I said, don't worry about depreciation for this because we've already done depreciation. So a loan to the company, will I reflect that in my budget as income? So if I borrow money to my company, do I expect them to pay it back? And the answer is yes. So has the company grown or increased its value? No, it's got more money in the bank, but it owes the same amount to the shareholder. So it will not affect my budget. But if I loan money to my business, will that reflect in the business's bank account? And the answer is yes. So you loan to the company 30,000 Rand in December. So in December, I'm going to show 30,000 Rand as a positive cash flow. And then I say, and we purchased 20,000 Rand in computers cash in the same month. So does that affect my budget? If I walk into the PC shop and I've got 20,000 Rand in my bank, if I walk out of there and I've got 20,000 Rand worth of PCs in my hand and no money in the bank, did my value change? The answer is no, I'm still worth the same amount. So it doesn't affect my value, and therefore I don't show an income or expense. But if I buy the PCs in cash, then it will definitely affect my bank account. So in December, I'm going to show a negative cash flow of 20,000 Rand. Okay, so number 9, does the first and the second one only affects the cash flow. It does not affect my budget. If I were to depreciate, yes, then it would affect my budget, as I will show the depreciation of the computers. Then we get to number 10. Audit fees for the 4 months will be 6,000 Rand payable in the 4th month. Okay, now again, audit fees work very much the same as the bonus. Do I have to pay my audit fees only because I worked for, or the company was operational for Feb? And the answer is no. The audit fees will be payable because of all the months that I have worked. So you need to accrue for that audit fee over the 4-month period. So it's 6,000 Rand divide by 4. So it means every month I've got to raise a provision for 1,500 Rand, 1515, so that my provision totals the full amount that I have to pay. But then in the 4th month only do I get the auditors out. They come and do an audit for everything that I've done for the 4 months, and in that month I have to physically pay them. So I'm not going to pay the auditors 151515. I'm simply in the last month, when they do the job, going to pay them the 6,000 Rand. So audit fees will affect both my budget, because after I've paid the auditors, I'm not going to get the money back from them. I've lost that value. And it also affects my cash flow, because I will physically have to go and pay the auditors. Right, so that should give you more or less idea. So in practice, there will be many different types of transactions, but you understand the theory now. If it increases or decreases my value, put it in the budget. If it increases or decreases my bank account, put it in the cash flow. Now, let's just have a quick look at this business. Now, again, we see that if I look at my profit, this business is profitable. So I would, based on the budget only, start this business in a heartbeat, because I'm going to make money from the 2nd month onward. But if we look at the cash flow, what's the lowest point that we've got on the cash flow? And it's actually the last month, 23,000 Rand. So that means when I do this cash flow forecast, I know I need to either go to the bank so that my bank balance can go into overdraft up to 25,000 Rand. Or if I don't have that, then I know in November I'm going to have 25,000 Rand into the business as a further loan to make sure that my bank closing balance never goes below 0, because I don't have an overdraft. So hopefully that can illustrate to you guys why it's very important to not only do a budget, but do a cash flow along with that. Right, so that would conclude our lecture on budgets and cash flows. Hopefully that will give you guys some guidance in planning the start of your business, or if you guys are going through a bit of a difficult time, well, even when things are going well, it's always good to do a budget and a cash flow, know what's coming in, know what's going out. Okay, the next lecture will be the assignment lecture, where I'm going to give you guys some hints and tips, hopefully clarify some of the line items that might be a bit confusing.